Congratulations. You did it. You're a homeowner. You're living the American dream. And you got a pretty good mortgage payment too, except for boom, one hiccup. 1 month, your mortgage jumps up by $2,000. What are you gonna do about it? You gonna call your mama, call the government? Can't call anybody. Well, that's what really happened to this guy. And so we're gonna react and see what lessons can we take away from this guy's scenario to make sure that doesn't happen to us.
Here we go.
Guys, tell me why my mortgage went from, don't judge me here, 3,200 a month to 5,600 a month. Backstory here is I was looking for a
Mm.
house back.
What if your budget was already tight
You-
and you were
Mm.
squeezing every dollar? You are already trying to make it work with what the payments that you thought it would be.
Gee.
That's rough. Let's
You
keep
did
going.
everything right. You budgeted. Like you budgeted. It's on paper. You did everything right. Okay, $3,200. Then boom.
Stress.
back in 2022, and I put in offers on multiple homes. So we decided to go. I'm sorry, they got declined, and they wanted 50 to 60 grand over asking price for the home with no contingencies and all that kind of stuff.
If you're listening, don't ever do that. Just because everybody else paying 50 and 60 over does not mean you have to get involved in that foolishness, because you are clearly overpaying for the home and you are not going through the proper protocols to make sure you're making a good purchase decision on this large purchase. And it's probably usually the largest purchase of your life. So to not go through inspections and skipping certain things, don't do that.
Long story short, I bought a new home with Ryan Homes. The worst decision I've ever made in my life. I swear to God, and I am paying for it till right now. Long story short, I'm actually selling that home right now. Bought a mortgage with Ryan Homes, and I am the last house that's built on this subdivision, the absolute last house. When I signed on the dotted line, my mortgage was 32 and some change. And I was fine with that because that's what I expected, the size of the home, X, Y, Z, yada, yada, yada. Come to find out that, again, um, I had a realtor during this time, but with new
But
construction, Ryan Homes doesn't pay the realtor a commission. So I was like, well, okay. I'm not going to ask him to come in and do any kind of work because he's not going to get compensated for it.
I
So
know where this is
I
going.
let him know what I was doing, and then ended up being no realtor. So anyway, next thing I know, I get the first tax bill.
Let me stop it. Let me stop it right there. Let me show you what happened to my boy. This is what happened. I'm about to do another screen share real quick. Can you see my new tab?
Yeah, I can see the Zillow.
Okay, so let's just assume that we're in Dallas, Texas, right?
Hmm.
So this is a new construction home, right?
Right.
You see this price,
750. Not bad. Okay.
and you see here where it tells you estimated monthly payments.
Right. Hmm.
That's based on this price. Guess what it doesn't include?
Doesn't what does it not include?
Taxes, HOA,
Ooh.
any other monthly.
And HOA can be like up almost quadruple digits. Well, it's like 1,000 a month.
Nah,
Some areas.
it depends. But this is where when he said, you remember he said he got his tax bill. Do you remember that?
Right. Hmm.
Okay, well, he was getting ready to go into it. Well, what happens is when you look on this site, you see where it says public tax history.
Right.
Basically, what happened was the tax is assessed based on the old price,
Mm.
meaning, so with this being a new construction, that's the taxes for the old value of the house. How much is the house? How much is the house worth now?
It's worth 750. It's worth triple, more than triple.
So the tax assessment is based on the house still being worth 218,000. So when it jumps up to 799 or whatever that the cost is now, what do you think is going to happen to this number?
It's not gonna be pretty, man. That's not good. And so that's okay. Now I can see if you split that up over 12 months, easily another 1,000. Or would you rather
Yeah,
pay lump sum? However you want it, you still gotta pay
it. It'll probably be double.
it. Wow.
So going back to the story, let's see how this played out.
On the property with land.
There it is.
Property with the home build. The taxes were $16,000.
See what I'm saying?
That's like what we just did.
$16,000.
That hurt. He's
So
stressed.
that's not not a half of it. So I then go call like, hey, is this right? Is this correct? Like, yeah, that's your correct property tax.
Yeah, that's right.
We're not sure why, but Ryan Holmes did your estimate based off what your taxes could be.
Correct.
On the home because you're the last home built. So there's plenty of comps in the area that they can use as, hey, your taxes could be this. However, they use taxes off the land because it's going to show you a cheaper mortgage. Okay. So I'm like, okay, so
Like I just showed you.
what do you have to do? Well, you got to pay them so your property taxes go up. Okay. The next part of this is that being that my property taxes will be this, and being that the property taxes were underestimated for that year of 2022, 2023, I believe it was. Now my escrow account is negative
Yep.
$11,000.
Yes, sir.
Well, can't wait, can't.
Negative 11.
You're gonna have to pause that. And for us Gen Z, because I mean some of us trying to buy homes and stuff, but for most of us Gen Z that's renting, you might have to break down what does that mean when he says my escrow account is in negative? Because that flew over my head.
Okay, so let me tell you how escrows work in banks. But I'm gonna pull it up. Escrow and mortgages.
Because I've heard of an escrow, definitely something I've heard of. I know it got something to do with your home, but like it doesn't sound like something I want to be in the negative. So first I need to figure out what it is first before I can keep.
All right. So I just moved it over to Chat GPT. I use this a lot. This as soon as I open up, it's my Google search now. So escrow. So what is escrow? Escrow is a financial arrangement where a neutral third party holds funds or assets on behalf of two parties involved in a transaction until specific conditions are met. So think about in real estate. So in home purchasing. So during home purchasing, when you make an offer on a home, you typically provide earnest money. So we're gonna skip that one. This money is held in escrowed account until the transaction is finalized. That's true. But now let's talk about the post purchase, meaning you purchased a home. So this is what's usually, if you get a mortgage, this is usually what happens. And they call it a mortgage escrow account. So after purchasing a home, your lender usually sets up an escrow account to manage property taxes and homeowners insurance. Each month, a portion of your mortgage payment is deposited into this account. When taxes and insurance premiums are due, the lender pays them on your behalf using the escrow funds.
It's almost kind of like, it's not the exact same, but it's kind of like, I don't want to say payroll taxes, where it's like your employer, it's stuff that's going on in the background that if you're not wary, like this dude, you don't even know, and you hoping that it's balancing out, but it sounds like his didn't balance out. He got a really big bill because it didn't balance out.
That's correct. And so just to go take it a step further, using this opportunity as education. So understanding mortgages. A mortgage is a loan used to purchase real estate. You should get that. So here's the breakdown of that mortgage. You got principal, the amount borrowed. You got interest. Banks gonna get their interest on it, right? They lend you the money. Taxes and insurance. This is the part right here. Often managed through the escrow account. So it's your mortgage payment, taxes, and insurance, and PMI if you haven't if you're putting down less than 20%. So all of these make up the mortgage. And
So,
you're making one payment, but all is broken down into these different things.
right. So whoever you're paying it to, which is I'm assuming that's the lender, they decide, okay, X amount is going to go towards the taxes and insurance, that escrow account. We're going to kick it to the escrow account for that.
That's correct. They
And they're
actually
estimating.
they make the tax payment on your behalf to the because they're trying to protect their asset
Right.
because they lended you the money. And so you're just making one payment, but they're turning around and making that payment to your insurance company, to your taxes. You're
Right.
still responsible for it. And so sometimes there's a deficit. If you're not putting enough in, then you're gonna be upside down, like
Cause
the
right,
gentleman
like
here.
like buddy, because you're doing because they're doing this for thousands of customers. So it's on. I don't even say it's impossible, but it's just gonna be difficult for them to have 100% accuracy of like, okay, we got every single estimated escrow right. If you it's on like I said, it's on the owner to be diligent. They're doing this as a courteous to you. We're estimating the tax payments for you, so you need to be up on that to know that.
That's correct. That's on you. It always fall back on you. You need to know. Let's finish this.
$1,000 because Ryan Holmes only used property. So now I not only have to get my current property taxes updated into my mortgage. Now I have the rears back taxes in my mortgage.
Yep.
People, when I tell you, I almost lost my shit. I did lose my shit. I'm not gonna
Come
lose my
on,
shit. I completely lost my shit because it's something they don't tell you about new construction.
He blacked
And
out.
people will say, "Oh, you should have had your realtor, you should have your attorney."
yeah.
And that I guess I take the hit on that because I'm thinking I'm not going to use my realtor who I've been using to show me these houses because Ryan Holmes they don't pay a commission off the sale. So I'm like, man, that doesn't that's not right. I'm not going to use my realtor to come in and do free work. I'm going to pay out of pocket for my realtor, and then I don't. It was yeah. So
And also, he was saying Ryan Holmes didn't tell him their job is to sell you a house. Their job is not to tell you about taxes per se.
Exactly.
So when you're going in, it's no different from anything else. You got to already anticipate these are the costs. And when it comes to a home ownership, it's a great thing, but it's usually going to cost a little bit more than you thought it would. So you saw how I did a quick Google search and it broke down what escrow is
Hmm.
and all the different components where you can even go a little bit deeper of like where you're going to buy. You could plug in the numbers, purchase, what is this purchase price going to be? What is the potential taxes? What you're doing that same step by step breakdown. What you're witnessing is the aftermath of not completely doing your full due diligence. But I can appreciate him being open and transparent because other people can learn from his mistake.
For
But
sure.
what you saw is, and we all hey learn a lesson in some form, whatever that learning lesson was for us. But this is definitely an expensive learning lesson for him because this is what it looks like when you don't do your due diligence and in terms of the home purchasing process. Let's see if there's anything else.
mortgage went from 32
And he's pissed at
to
himself.
5,600 a month.
Can't be nobody else.
And I'm like, yo, this can't be right. So now I'm looking up property taxes in Libertyville and Vernon Hills on houses that are places, nicer areas than this. This is Antioch, Illinois. No knock against Antioch, but it's not Libertyville, it's not Vernon Hills. It's nothing. There's no restaurants. I mean, there is a few, but it's not built out like that. The infrastructure isn't in place like those places is. And I'm just kind of like, what the so, long story short, I know I said that before, but this fast forward. I'm sorry saying that. Fast forward. Unfortunately, the home that I thought I was going to be in for 7, 10 years that my kids would grow up
Can't
in,
afford it.
I'm selling.
Mm.
I'm selling that home because we can't afford it, and I refuse to be house poor and paying for a house that I'm just trying to keep up with. There's no way possible I'm going to. And then let me say this too: is that the mortgage would end up being, even if I didn't have the taxes in the rear, escrow account, the mortgage will
Yeah.
still end up being, um I did the math, it was like 4,000 something a month, right? Because my more principal and interest was like 27.
Taxes,
Property tax was like another 13.
insurance,
So it's
and
like
PMI.
4,100 a month.
Mhm.
No, no, absolutely not. I refuse to pay $4,100 on a house, property taxes, that amount, and you don't have anything to go off of. So, yeah, guys, if you are thinking of doing new construction, if you are thinking going with a Ryan Homes, if you are thinking going with any new construction, any new development, specifically Ryan Homes, make sure that you look on that paper and it doesn't say, when it says taxes, make sure you ask them, is
That's
this
the key.
property on the house after it's built what it could be or before? Because if you see something that
Mm.
says, unless you're in a different area, stuff like that, I get it. I'm in Antioch, Illinois. If you see something that's like $2,000 or $3,000 of property taxes, make sure you ask them, hey, is this on before the house is built or after the house is built? Because they can estimate.
That part right there. That's the takeaway. That's the takeaway right there. Do your due diligence. Now he's doing due diligence, and that's how we learn the learning lesson. So one, I can appreciate him sharing his learning experience, but that was the takeaway, and it's a cautionary tale of, well, I'll give him credit too. Once he realized this a bad deal, I can't afford this. He got out of it, because most people will sit there and sink in it, and then before you know it, you way upside down, you getting foreclosed on, and you just deer in the headlight, you stuck, you froze, and now you're not making a decision at all. But not making a decision is still making a decision, but now it's sinking. And so at least he recognized this, the math is not mathing on this situation. I can't afford this, and I'm about to sell this ASAP and get rid of it quickly. And then he learned a lesson. What are your thoughts?
Man, it just makes me think about, w- we have so much access to information, and so it's not just about knowing information anymore. That's not what's cool. We having such access to the information puts us, we get in such a DIY mind frame to like, okay, nah, I don't need to contact the expert. I don't need to do this. I don't need to consult. But this is like a prime example of, like, if you're going through the home buying process, you could DIY it out and you could get really far with. I mean, I was even thinking, because I was looking into this type of stuff, a couple of years ago, before ChatGPT got popping. I can't even imagine now with GPT, you could get really far. But like you said, this is the biggest purchase of your life, and so if you this is the type of decision that you need to. You can't just do this in your own head. You need to pay someone to go do it. I think that when things are this major, when it's such an important decision, you have to go get consultation. You have to go pay and get consultation.
Yep, 100%. Well, hope y'all like this video. Until the next one, make sure to like, comment, and subscribe. We'll catch y'all on the next one. Peace.
Peace.